Hi, I'm Shade Foray with Tax Sale Support, bringing you the Tax Sale Secrets weekly update. Now, for this week, we've got a number of things that we would like to announce and talk about. A couple of them, I know, Steve, we've got a Saturday morning workshop tomorrow morning, which is January 27th.
Yeah, exactly. We're going to start at 10 a.m. Mountain Standard Time. That would be 9 o'clock Pacific Standard Time and noon Eastern Time. So essentially what we're going to be doing is really helping individuals understand tax liens and deeds, and we're also actually going to go through and look at some live research and do some research on some live properties.
Yeah, it's a great opportunity to get on something that's not going to cost any money and to see what types of opportunities are out there right now and how we do a lot of the research and work that we do here at Tax Sale Support. Also, you can download a free ebook. It's a two-part ebook at secretsoftaxlieninvesting.com if you haven't done that yet. And we also still have membership openings that are available, although they're filling up fast.
Yeah, exactly. You know, with our membership program, it's not just the educational materials, but you're going to have a chance to uh, attend a weekly webinar with us. So we have all of the tax sale lists. So there's a lot that goes into our membership. If you're interested, you can go ahead and click the link down below in the comment section and pull up the website.
Yeah. There are also a lot of sales taking place coming up.
Yeah, exactly. With every week we want to go through and we want to highlight some of the upcoming auctions that are taking place, some of what we like to call the hot list. And so on January 29th, there's actually no significant auctions taking place, but on the 30th, there's going to be a couple of important auctions taking place in Washington, Walla Walla, and then also Indian River, Florida. Now on the 31st, there's a good auction happening in Highlands County, Florida, and also a couple of auctions in North Carolina. But then starting on, January 31st, but starting on February 1st, that's really where we're going to start getting into the Arizona tax lien auctions, the online auctions that are going to be happening. And so Apache, Arizona is going to be opening up for bidding on that day. So if you're interested in any of these Arizona tax lien sales, you want to get ahead and get registered beforehand. Also, Miami, Florida, a hot real estate market, is going to be having an auction along with Hillsborough, Florida. And then on February 2nd, we have Navajo, Arizona, and then on February 5th, we have Yavapai, Arizona as well, along with Manatee and Escambia. And so the ones that are underlined are going to be the online auctions, but there's a lot of good auctions coming up over the next week.
Yeah, excellent. It's a good time to get started, still early enough here in the year. Now, we wanted to answer a couple of questions here before we got into the tax sale tip. One of the questions that we get asked at times is, when I purchase a property at a tax deed sale, what happens if there is a mortgage on the property?
That's a great question. That's one thing that we love about tax lien certificates and both tax deeds is when we go through the foreclosure process, it eliminates anything like a mortgage or any other kind of encumbrances on the property. So that's one thing that's nice about purchasing tax deeds, is the only other things that we need to worry about or other type of governmental liens.
Yeah, in fact, it's part of the power of that judicial foreclosure that a tax deed is taken through prior to being offered for the sale. And being that first position lien essentially that's against it, it can wipe out any other claims, including a mortgage. So really, the mortgage itself is more like an agreement between the lender and the borrower, and the property stands as collateral. And the bottom line is, if foreclosure notices go out, they're going to go out to the owners, including the mortgage company, and they're going to have the opportunity to pay it off, which oftentimes they'll step in and do, because if they don't pay it off, then the property can be foreclosed on to the mortgage company the same way it can be foreclosed on for anybody else. The primary difference with this is that the mortgage might still exist between the borrower and the lender, but the property would no longer be collateral, no longer be attached to that loan if it was foreclosed on. So you never have to worry about a mortgage being attached to the tax deed in most states.
Yeah, I think that's a good point. And another question is about tax and certificate auctions and what's the best way to get started. When we're talking about tax liens, really, I think either online auctions or over-the-counters is a good way to get started unless you live within a tax lien investing state. And so with Arizona having their auctions come up, it's not going to cost really anything to participate in the auction. So you may have to do a deposit depending on the auction, but if you don't buy any tax liens, you're not necessarily going to be taking a lot of money out of pocket. And so participating in some of the online auctions to get an idea of how it's done, and then also with the online services that are available, you can actually purchase over-the-counter tax liens right off of the Real Auction or Grant Street Group websites that are connected to the Florida tax lien counties.
Yeah, I agree. I think that's a really good way to buy because when you're doing it over the counter, you're not faced against a deadline like you are quite with an auction, and you're also going to earn the maximum interest rate return. So you're able to go through a list, decide what you want to buy, and know that you're going to earn 18% on the over the counter properties in Florida, which is a great rate of return. So I agree. I think that the over-the-counter and online auctions are a good way to do it, especially with Florida. And also if you get the chance, if there's a local sale that's being held live, it's always a good idea to attend a sale live if you can. Now, for the tip we wanted to talk about today, we wanted to talk for a minute about using your capital effectively. And it's actually it's a topic that we come across on a regular basis because we've got tax liens, we've got tax deeds. In other words, different investments for really different purposes, different outcomes. And the question comes up all the time about what the right way is to use your money. Because I think the question we have to ask here is there a right way and a wrong way that you can use your investment capital? And the answer is sure. You can use capital in wrong ways if you don't fully understand the investments and if you are trying to purchase essentially the wrong thing given your objective. Really, I think that using your money correctly depends on a couple of important factors. Number one is the amount, and number two is what your financial objectives are. The amount can change quite a bit in terms of what's available to you and what you might be able to buy, but your financial objectives are equally as important there because you want to work towards your objectives, but at the same time, it's got to be realistic based on the amount of capital that you have.
Yeah, I think that's a good point, and that's part of the reason why I think we're so obsessed with tax liens and deeds is that because of all of the options that are available with tax lien and deed investing, you can really determine exactly what is going to be the best investment strategy for you. And so if you had $10,000 and you were trying to make that into $100,000, well, tax lien certificate's probably going to take you a while to be able to make that type of money off of earning 15 or 18%.
Yeah, and most people that have that limited amount of capital don't have that kind of time either. They can't wait for the years and years that it might require earning a high interest rate return. A couple things that we know of when you're working with capital: the more capital you're working with, the more valuable your time becomes. And the less capital you're working with, generally the less valuable, I guess, your time is. In other words, you can put more time into it when you're working with less capital than you can when you're working with more capital. Your time really becomes a big factor. When you're working with less capital, too, it also means that, it specifies exactly what you need to have happen with the investment. Low capital requires a short-term investment that's going to follow a buy low, sell high strategy. It also means you've got to hit a home run on these first couple of investments so that you've got more money to work with as you try to turn it over.
Yeah, exactly. I mean, if you're just trying to make interest rates off $100,000, that's going to take one strategy. But if you're trying to increase your money, then that's going to take, just like Shade said, a different strategy with working with less capital.
Now, to help illustrate this, what we're talking about here would be the difference between, let's say, investor A and investor B. Okay, so for investor A, let's say that right now they've got less than $20,000 or so net worth. They've got about $7,500 to start with, versus investor B that has $1 million net worth and is thinking about getting started with $50,000 in capital. These two investors have really different objectives here because they're sitting in different places here to begin with. The first investor A, they need a huge rate of return. They're trying to take $7,500 here and turn it into a lot more. And so therefore, it's going to require a short-term strategy based around acquisition, and it'll require more time. But the investor B that has all that capital, they don't need quite the same return on their investment because they've got more capital to work with. So what they're really more interested in is an investment that's highly secure and that is easy, not going to take up a lot of their time.
I think that's a good point.
Yeah, so essentially, if you've got a limited amount of capital and you know that you have to turn that into a lot more, it's going to reduce the number of options out there that you should choose. I mean, essentially, there are three ways that we make money with tax sales. We make money when tax liens redeem, meaning we get a check in the mail, and that's going to be for our initial investment plus the interest that we've earned up to that point. It's a fantastic rate of return, but we don't know when that's going to happen. It can take a long period of time. But if you're looking for a safe investment that earns a high rate of return, then when tax liens redeem, it's an excellent way of doing that. But we also make money when we sell property that we've acquired through tax deed sales. So if we can sell something for more than what we bought it for, we'll make a return. And the third way is through income properties. Essentially, being able to rent or lease a property in one way or another is another way that you can get paid. And so when you're working with a limited amount of capital, it will direct you more towards buy low, sell high strategies, which are going to require a tax deed in order to do that. But if you're more interested in earning a good rate of return using a larger amount of money, then tax liens are an excellent way to do that. The safest way that we know of to earn a good high interest rate return safely.
Yeah, exactly. I think this breaks it down pretty good. I mean, if you're looking for tax deeds or if you're investing in tax deeds, then you're essentially looking for lump sum transactions or returns. You're essentially looking to pick up property, turn around, flip it, and start earning income or building that retirement portfolio. With tax lien certificates, you've already built that retirement portfolio, and now you're essentially just wanting to be able to capitalize on it and earn the very best interest you can with the minimal amount of time.
Yeah, I think that's a good point. You're basically either in a phase where you're trying to build up that working capital, or you've already got that working capital, and whether you're at either place will play a big role in the types of investments that you should go after. And so, generally, if you've got less capital, tax deeds are going to be the best way to go. And if you've got a lot more capital, then liens are a great way to go. But you can also invest in deeds if you've got more capital. You've got more options basically when you've got more capital.
Yeah, and one thing I love about this investment strategy is there's not any strategy that I know of that you could go out there with a couple of $1,000s and pick up a tax deed, from anywhere between $500 to $5,000 and turn around and make a huge profit on it.
Yeah.
Where you're buying property for 10, 20 cents on the dollar, and even if you're wholesaling it for 50 cents on the dollar, you're still making an incredible return.
Yeah, I think that undoubtedly it's the cheapest way to buy any kind of real estate that we've found. And what's interesting about that is it's also a way to earn a great rate of return on larger amounts of money. I mean, really, earning a rate of return between 12 and 18% is not an easy thing to do in most investments. But with tax liens, it's something you can guarantee every time.
Yeah, exactly. Really, this is the best investment strategy, period. I think that's something that we've been alluding to for years, but it's really what it comes down to, because with tax lien certificates, you're getting that guaranteed interest rate return, takes less time. Essentially, once you purchase those tax lien things, you're just essentially waiting till it redeems, and then once it redeems, you're going out and purchasing more tax liens with it. With tax deed investing, somebody can literally start out with $2,000 to $5,000. Even less than that if they really wanted to work, and be able to go out there and start buying property and build a residual income in a business where it's bringing in consistent dollars on a monthly basis. And there's no other investment strategies that I know of, business strategies that we've seen that can help an investor, help somebody go out there and achieve the financial goals they're trying to get than by this strategy.
Yeah, I mean, really, the fact of the matter is, it's how the banks have been investing, and if banks are investing in tax liens, it tells you something about their kind of, the rate of return that they earn and the security of the investment. It really tells you a lot. Well, thanks for watching our weekly update. You can check us out on any of the websites, Tax Sale Support, secretsoftaxlieninvesting.com, or you can also check us out on Facebook. And please don't forget to subscribe to the videos if you'd like to watch more.
Absolutely. Have a good week, and we'll be putting out a new video again next week.